Is it too late to buy NVIDIA? Since the stock market bottom in October of 2022, NVIDIA has been on a massive run. It is up over 1,500% over that time span, just 3 years later. So the people that bought it back then, obviously they've got a ton of profit. They're feeling very comfortable. But those that have been on the sidelines or are considering the investment today, is it too late to get in? I'm Corey Halliday, and today I'm going to walk you through some ways to gauge whether it's gone too far, too fast, whether the fundamentals, the technicals can support higher prices from here. That way we can approach this with a better sound temperament where we're not using FOMO and emotions and greed and all these things to get us in. Instead, we're going to look at this very logically. We're going to say, okay, what's the opportunity? What's the risk, reward, probability of success? And we're going to put emotions on the side. Before we go in, I want to be clear that none of this is financial advice. It is strictly for entertainment purposes. Investing in stocks does involve risk, and you should always do your due diligence. Make sure that this investment is right for you. So let's go explore some charting, some technical analysis, and some fundamentals. I'm going to start here with a chart of NVIDIA, and this is a very long-term chart. So we're looking at a weekly chart. What does that mean? Each one of these candlesticks represents one full week's worth of trading. So Monday through Friday is built into one candle. If you come back to the October 2022 low down here, the stock price was at about $11 per share. As of this video, it's up to about $180 per share. If you do the math on that compounding, 1,500% upside. Now, if we look at this technically, there's a theory, Elliott wave theory, that says that assets in their dominant trend move in 5 waves, and then there's 3-wave corrective patterns. Now, I don't consider myself an Elliott wave theory end-all be-all. I don't worship at the altar of Elliott wave, but I do believe that the principles behind it are good, that assets tend to rise in certain patterns and tend to fall in certain patterns. And when an asset has risen across 5 major waves, it's due for a correction in what they call an ABC. So if we were looking at drawing it out, you would have 5 dominant waves. And usually, so here's the first wave, the second wave. Generally speaking, the third wave is the biggest and most powerful. Then you have a 4th wave down, and then the 5th and final wave. The 5th and final wave is usually the biggest when you're dealing with a more volatile market environment, with commodities, for example. So if I were trading gold, it would not be surprising if the 5th wave was stronger than the 3rd. Or if I were trading in a bubble, let's say, the 5th wave could even be stronger. If I were trading oil, etc. But usually the 3rd wave is the largest. And then you go through what they call an ABC correction, a 3-wave downturn. And that 3-wave downturn generally takes you back to about where the 4th wave was. And that's the end of the correction. And then it can all start again in the dominant direction. Because remember, assets are generally rising. Assets tend to go up more than they go down. So if we use that theory in NVIDIA, first of all, back here, you can see an ABC style correction. You can see a 3-wave downturn that brought us down significantly back in that October 2022 time period we referenced. Was it significant? Well, it looks small on the chart, but it was very significant. If you look at the highs from where we stalled out, we were almost above $30 per share, and we backed up to 11. We lost some well over 50% of the stock's value. So that is a deep correction. That is a big downturn. You can see that since then we would restart the wave pattern. So 1 wave up and a correction, another wave up and a deep correction, and then another wave up. And if we were looking at this, it's never perfectly clean. There's always some zig and zag and so forth. But I call it dot to dot. You want to ignore some of the little choppy moves and really focus on the bigger trends, the bigger directions. Now, you could break down within each one of these waves that it's not uncommon for it to move in a smaller 5-wave pattern and 3-wave pattern within these bigger waves, right? So it's not uncommon for this whole wave to be 5 smaller waves and so forth, would be the principle. But basically, if we were looking at this from the standpoint of Elliott wave, we would not really be chasing this because we'd be nervous that, hey, it already made a huge wave up and a correction, right? And there could be 5 little waves within that and an ABC. And then it made another big wave, and usually this is the largest and most powerful, and it's done that. And now we've gone up for what could very well be the 5th and final wave on the long-term perspective, on the very, very long-term outlook. Because remember, we're using a long-term chart setting. We're using a weekly chart. We're not looking at where NVIDIA is going to be over the next week or two or next month or two. We're talking about big picture. And if this is right, that we've really exhausted 5 major waves over the long term, then the next longer term pattern that's not too far off in the distance would be an ABC style correction. A 3-wave downturn that would bring you back towards where the 4th wave finished. And so in the case of NVIDIA, you could see this stock back up in the coming years, certainly towards, I don't know if it'll get all the way back to 100, but let's say 110, 115. A downturn that's significant enough that waiting it out and taking that opportunity to buy on that dip would be beneficial. So from a technical perspective, if you've already exhausted and you're in the 5th wave up on a long-term trend, we don't really want to chase there aggressively. We can still trade it up or down, but we don't want to invest in it. We don't want to sink our teeth in and expect this thing to just grow and grow like it has in the past. We'd want to be a little bit more cautious. Frankly, even consider being a little bit more of the mindset of buying some protection, hedging up the position in the not too distant future. Now, if we turn to the fundamentals, they really have been a rocket ship. This company has been phenomenal. And if there's anybody that's been a beneficiary of this AI craze, it's NVIDIA, because everyone wants the chips, and NVIDIA has the highest end, fastest, biggest chips. Well, they're tiny, but the most powerful chips around. And so I have to give Jensen Huang, the CEO of NVIDIA, credit. He has been on the forefront of this growth and this opportunity. So he has positioned that company for success, and you can see it in the numbers. The dark blue line or dark blue bars are revenue. So how much money is coming in from customers? The lighter blue is earnings. How much money do they actually earn once they've paid all their expenses off? How much money do they keep? And just look at this growth. This is picturesque. If you were to say, what would be a best case scenario for fundamental analysis, you would draw a picture just like this. And fundamentals can be very fun when a company is exploding in this fashion. Look at these numbers. The revenue, the growth in this revenue is astounding. The growth in the earnings, the amount of money they keep, is astounding. And remember, this is in billions of dollars. So let's just take this past year. In 2024's numbers, NVIDIA had revenue of just over 60 billion. So if you add up all the customers that sent money to NVIDIA, all that money coming in, over 60 billion in revenue. This year, over 120 billion. So easy math, that's a double. That's greater than 100% growth in the revenues. So they're bringing in more and more customers, and more money is piling into the business. Well, you don't always get to keep all of that money. So how much did they earn? How much did they keep after paying all expenses and such? You can see the lighter blue bar, probably around 30 billion. It's in between 40 and 20, right? And you can see it's grown to over 60. So again, over 100% growth. Let's look at the actual numbers below. 130 billion now. It was 60 billion last year. That is more than 100% growth. Let's look at the earnings. what they call net income. And it looks like we cut this page off. We don't have the net income, but you can see it here. Just around a little over 30 billion in earnings in 2024 and probably over 70 billion, frankly, in 2025. So safe to say that the earnings, the net income, the amount that they've kept has been over 100% growth as well. So this company has been hitting and firing on all cylinders. So why wouldn't we just buy it if business is booming? Well, the stock already reflects that, right? The stock since that November or October 2022 period is up 1,500%. So that's reflecting a lot of growth in the business. NVIDIA is now the single largest corporation in the S&P 500. It has overtaken Apple. It is now a $4 trillion market cap. So it is massive, and it is frankly overextended. We looked at the chart. We looked at the waves. It's due for an ABC style correction. Now, will I be looking to buy potentially on that correction and add to my stake and buy more shares of NVIDIA? Potentially so. Will I be looking to hedge up and protect existing positions? Absolutely. So just because hedging is right for me, though, doesn't necessarily mean that it's right for you. As I said at the beginning of this video, take analysis of stocks with a grain of salt. Whether it's from us or anyone else on YouTube, you need to make sure that you educate yourself. And if you're really serious about learning to invest, take a free class with us at the Cashflow Academy. We'll show you how to use stock markets to start to compound your wealth. And it's really about asset acquisition. So when someone says, I have a full-time job, I don't have enough time, I don't have enough energy, this doesn't take a lot of effort, and we always keep it fun, simple, and real. So come and check us out at the Cashflow Academy. The link is in the description below, and we will see you next time.